What's up, guys? My name is Tai Zen. Welcome to the cryptocurrency.market channel. This is a trading, investing, and entrepreneurship channel. In this video, I want to talk about how to rebalance a cryptocurrency index portfolio. Okay, so this is more of a tutorial, guys. So it's not going to be where I'm just going to sit here and just do a talking head video. So you guys might want to follow along with me so you guys can learn how to do it correctly. Okay. So before I get started, if you guys are watching out there, let me know if you guys can hear me on my channel. Get started. If you guys are watching out there. All right.
I can hear you now.
Okay. So if you're on the live stream with me, I know you guys can hear me because I've been talking to you, but I'm talking about the people that's not on the live stream, the ones that are just viewers out there. Just let me know that you guys can hear me before I get started.
Yeah, I can hear you.
Okay. So let me just mute everyone real quick here. All right. Go ahead and mute your microphone too, Kevin. So just give it a few seconds here, guys. I just want to make sure everyone can hear us. Okay, so Logan says he can hear us. Brian says he can hear us. Okay. All right. Okay. Okay. All right, guys. All right, looks like everybody's here. Okay, so let me go ahead and get started here, guys. All right. So I'm going to go ahead and share my screen with you guys. And then whenever you guys see it, please let me know when you guys can see my screen. So I haven't done a live stream in a long time, guys. Okay, I'm going to share my screen here. Okay, let me know if you guys can see my the Typhoon Portfolio Manager. Just give me a thumbs up or put a yes in the comments whenever you guys can see it, the viewers out there. If you're on the live stream with me, I know you can see it. If you're on the live stream with me, I know you guys can see it. So, all right, so Michael says he sees my screen. Okay, all right, let's go ahead and get started, guys. Took us about 4.5 minutes already. I don't like to spend that much time on it. Okay, so I'm gonna run through this and I'm gonna explain to you guys how I rebalance the portfolio. I'm gonna remind you guys why we're doing a crypto index portfolio, and then I'm gonna explain to you how I rebalance it, and then I'll take some questions at the end, all right? And then I'll take the questions from our students first, and then I'll take questions from the viewers, all right? So I'm gonna come over here. If you guys haven't seen it already, guys, come over here to, I think this is, cryptocurrency investing number 187. And in this video, I explain how to create an index portfolio based on the Taifu 30 altcoin market index. All right. So over here, let's go take a look at how the index is doing. Okay. We're supposed to rebalance this every quarter, right? But me and my team was busy, upgrading this software here, this Taifu portfolio manager, and we're building some stuff in the background that you guys are not aware of, and you'll see it after it's done. But here's the U.S. coronavirus stimulus portfolio, and I just want to start by saying this, guys, that I'm not a licensed financial advisor in any country. I'm not a financial professional or anything. All right, I dropped out of high school. I came to America as a Vietnamese refugee. Dropped out of high school. I was too stupid to finish high school, and then hung out with the wrong people. Went to prison for nearly 14 years for drugs. I came back out of prison. I rebuilt my life and learned how to trade, and was able to retire by the time I was in my mid 40s. Okay, so I'm just sharing with you guys what we do. Do not take anything I say as financial advice. This U.S. coronavirus stimulus portfolio is just a case study of how we invest money into the markets, and it's not to be taken as financial advice. This is for educational and entertainment purposes only. Okay, so here we go, guys. First of all, just a reminder, if you guys watched through this video right here, that we started the portfolio back on May the 16th, somewhere around there. And here's the makeup of the portfolio. And I explained to you how I bought it and everything. I'm not gonna go over it again, but just go and watch the video, and then you guys will see all of the how I got this portfolio started, and I show you all the transactions that I made here, okay, and then all this stuff. Now, here's what we need to do. When that was done in May, so the rebalancing period was the 1st of July. So when I come over here, so far we started over here on May the 16th, right here on that candle, and it has gone up. Let me see. If you guys click on this button right here, it will expand the chart and pull it down a little bit so that you guys can see the date. And if you scroll the mouse up, it maximizes this chart. If you drag this down, it compresses it. And we can take the tool over here, the measuring tool, and if we go from where we started down here up to the high of this right here, the U.S. coronavirus stimulus portfolio is up 81%. That's not bad, guys. That's not bad. I think that many of you guys would be happy to have accumulated 81% gains since May the 16th. So from May the 16th to June the 16th, that's 1 month. From June to July 16th, that's 2 months. And then now it's August. We're about a week away from August. So in less than 90 days, the portfolio has grown 81%. So that's not bad. No, wait. I did the math wrong, guys. I did the math wrong. My bad. We started with $2,400. So we got to measure from $2,400 from somewhere around here. This is a rough guesstimate, guys. Don't jump on my ass if it's not perfect, right? So it grew to a high of 68%, and now it pulled back to about 62%. So in less than 3 months, the portfolio has gained 62%. So it's not bad, okay? So the reason why I'm quickly remind you guys, the way that we invest our money is that we put 80% of our money into the a portfolio index, into an index strategy, and then the other 20% of our money, we put it into a separate bucket, and we use that to trade more short-term and intermediate-term trades. The reason why we do that is because we believe that if we come up here to the, I'm gonna take the altcoin market index here, for example, and can change this, click up here and select 1 week so we can see the big picture here. So if you guys see here, in 2017, the index started in July of 2017, right here, in July, in the first quarter of July, okay? So it started there. Not sure why it has July the 26th. I'll have to get our engineers to see what happened right there. But it started on July 1st. Oh, it's on a week. That's right. My bad. If you switch this to a daily, then it'll have the correct date. So since it's on a weekly chart, that's why it started in the week of June 26th. So from here, if you look at it, it went to a high of 584 points, right? Let me see if I can magnify this for you guys. I'm gonna hit Control Plus here to magnify the screen. So in case you're looking at this on a phone or on a tablet, you guys can see it easier, all right? So it went up to here. So we are currently right here, and our investment thesis, our trading thesis, is that we don't want to miss out on this move right here, guys. We don't want to miss out going from here to the all-time highs up here, which is about 418%. So that's about a 4x. So we don't want to miss out on that. We don't want to do a bunch of stupid fancy footwork and too many fancy strategies, and then we miss out if the market goes back to the all-time highs up here, the altcoin market, okay? So now, just so you guys know, I believe that the altcoins have a higher potential for gains. So that's why I follow the Taifu 30 altcoin market index. Now, my business partner and fellow trader, Leon, he prefers to have Bitcoin in his portfolio. There's nothing wrong with that. So that's why we have the Taifu 30 cryptocurrency market index in there for him. And that one has Bitcoin in it. So on that index, if you guys use that one, it went to a high of about 707. Okay, so from here to here, it's about, right there, it's about a 154% gain. Okay, now Bitcoin carries most of this. Don't forget that. Okay, Bitcoin is about 62% of that index. So if I'm following this index, then my portfolio would have around 62% or close to it worth of Bitcoins. But I don't. I follow the Taifu 30 altcoin market index, and because of that, most of mine is in this right here. Right? I'm willing to take the risk of going from here to here, which is a 418% gain instead of the 154% gain. That's the reason. I think that the altcoins can move a lot more in this bull market than the Bitcoin can. That's why I took the altcoin market index instead of the cryptocurrency market index. Okay, and the difference between the two is Bitcoin. Okay, one has Bitcoin, one doesn't. All right, so we followed this to build the U.S. coronavirus stimulus portfolio, and what I want to see is this, guys. From May 16th, right there. Okay, let's look at how our portfolio did versus the index. Okay, now we are using the index here, the Taifu index here, as a benchmark. That means that we're using it as the ruler, the measuring stick, to see how well we perform here. So what I'm gonna do here is I'm gonna grab a vertical line and I'm gonna put it on May 16th, okay, which is somewhere around here, right there, all right? And I'm just gonna make this a little bit darker just so in case you guys are looking at this on a, right there. From there, and if we measure from just the closing price from there up to where it's at right now, it's up about 70%. So it's not bad. It's not bad. We're matching, we're getting close to it. We got like 60, what was it, 62 or 68% on the Taifu, on the coronavirus stimulus portfolio. What was it again? Was it 62 or was it 68? From here up to here, yeah, 62%. So we're up 62% on that one, and then on the index. Now, keep this in mind, guys. In theory, the index that we create with real money is always going to be slightly a few percentage points behind the index. In theory, let me say that again. In theory, if the altcoin market index goes up 100 points, and let's just say that it goes up 100%, our portfolio is only going to go up about somewhere around maybe 95, 96, 94%, somewhere in that area. It's not going to be exactly like it 100%. The reason why is because the altcoin market index, when they rebalance, there's no taxes, there's no slippage, there's no transaction costs, there's no commissions, there's lots of things that's missing. that we have to pay. So when I rebalance the US coronavirus stimulus portfolio, I have to pay for slippage, I have to pay for transaction fees, commissions, and all the little costs with it. So because of that, we cannot expect our portfolio to be exactly 100% the same as the altcoin market index. It's going to be close to it, right? Now here's where it can be above it or it can be below it, okay? So let's just say come down here to this index right here, and let's look at the components down here. I'm gonna hit Control Plus to magnify this. Well, that's gonna mess up so you guys have to bear with me at this scale, okay? So what's gonna happen here is, let me, Okay, so what's going to happen here is, if you guys notice here, since this is the altcoin market index, we have Ethereum in here, and it's 48% of the portfolio when it's time to rebalance on July 1st, okay? Now, I did not make this video earlier on July 1st or July 2nd or that week of July 1st, and the reason is because when I looked at the numbers here, it was not significantly different, okay? Right now, it's like 48% here. Oh, by the way, guys, this is of yesterday, okay? Not today, yesterday, and probably in about another, I'm just gonna be on the safe side here. By the end of this month, we should have the hourly data. So if you guys notice here, we only have daily, weekly, and monthly. So by the end of this month, I'm hoping that we have the hourly data. I already looked at the alpha version, the update, and we're working on that. So right here, right, it's 48%, and this is of yesterday's data, which is 50%. So there's like maybe 1.5 to 2 points difference there. And then with Ripple, there's hardly any difference. And then with Bitcoin Cash, there's like 2% difference. But keep in mind, guys, there's a 2% difference here. But on July 1st, it was not a big difference. Okay. And then on let me see, on Litecoin, in other words, the difference between this and this is not that big. And if I'm in the US or in the Western countries where I get taxed every time I buy or sell a crypto, then I want to avoid buying and selling as much as possible. And that way I don't have to pay the short-term capital gains tax, okay? In some countries, like for example, like in America, if I don't hold this coin for more than 12 months, then I have to pay the taxes if I rebalance it every quarter. Now, we want to rebalance every quarter, but if the percentage difference is not that significantly different, then there's no need to rebalance it. So for example, if this was 48% and then this grew to 60%, there's a 12% difference. At that point, then I will go ahead and absorb the tax consequences and then go ahead and pay the taxes on it and rebalance it, okay? But if it's just 1 or 2 points difference, right? Or let's just say that down here between these two coins, let's find a good example here. Let's say, for example, like this one right here, like Chainlink, right? Let's say that Chainlink went up like crazy, like you guys see here, and notice that it went from 4% to 7%. So that's almost a double, okay? But let's say that I look at all these and I say, you know what? That's the only coin that's the only coin I got to rebalance out of 14 coins. You know what? I don't want to have to pay the taxes on it, so I'm just go ahead and leave it the way it is. Okay, and there's nothing wrong with that. But if you do that, or if I do that, I have to be aware of something. I have to be aware that it's not going to match the altcoin index. So it's possible that in the altcoin index, when it gets back up to here, and there's a 418% gain on the altcoin index, my portfolio might only make 390% in gain. Okay, so right there, let's say that when the altcoin index goes back up to the all-time high right there, and it makes 424%, mine might only do 400%. Why? Because I didn't rebalance that one coin, that one individual coin called Chainlink. All right. Now, on the other hand, if the market goes up to the all-time highs again to 427% here, it's possible that my portfolio might even be higher than this. It might go up to 700%. 800%, right? Or to 700 points or 800 points. It may be higher than what the altcoin market index shows us, simply because I didn't rebalance that Chainlink trade, that Chainlink coin. All right. So do you guys understand why my portfolio performance may not be 100% the same as the Taifu 30 altcoin market index? Does everyone understand that? If there's any, I'm gonna pause right here. If you have any questions about that, of why it would be different, if we're following the Taifu 30 altcoin market index and rebalancing every quarter, right? Why won't the two be the same? Does everyone understand why it will not be the same, right? Any questions on that? If you have a question, go ahead and type it in the comments. If not, then I'll move forward. But I want to make sure that everyone understands that. Okay, so no questions? All right. Okay, so now that we know that, I'm going to come down here, and for the US coronavirus portfolio right here, it's done well, right? It's done well. When it gets to $4,800, it will be double. So I can see that happening fairly easily. I don't think that's going to be a big deal. And guys, it's always nice to get into a trade or start a portfolio, and it goes up 60-something%, 62% within 2.5 months, or less than 3 months. It's always nice. Okay, so all right. So this is the next thing I want to go over with you guys. I explained to you guys why I did not rebalance the case study on the U.S. coronavirus stimulus portfolio here. Now, because we didn't rebalance anything, you guys didn't see anything. Like there was nothing for me to buy or sell. So if we come over here to the spreadsheet here, all the quantities, pretty much the number of coins, pretty much stay the same. We don't have to decrease or increase any of those amounts, or add or remove any coins, right? Now here's what I will do so that you guys can learn from this broadcast. I want to go in and look at a few other portfolios in here, okay? I want to look at a few of these portfolios in here, and I want you guys to see what my eyes see when I'm looking at someone's portfolio, okay? Now, I don't know who any of these portfolios are, okay? You have the ability to make your portfolio public or to make it private when you guys create a portfolio here. Now, some of you guys have texted me and asked me, what's the difference between making the portfolios public and making it private? Now, if you don't want somebody to know your business, then, or know what's in your portfolio, then obviously do not make it public, okay? But if you make it public, one of the things that I can do is I can review it, okay? So I want to say something. I am not a licensed financial advisor, okay? Just want to remind everyone again that I'm just a Vietnamese refugee, went to America, okay? Got in trouble for drugs, went to prison for nearly 14 years, couldn't finish high school, came out, learned how to trade, became successful at it, and then retired, okay? So that's who I am. I'm not anybody that's a licensed financial advisor. So remember that. So when I say something in here about a portfolio, right, I'm not giving you financial advice. I'm just looking at to see what is risky and what is not risky, and what I think is good and what I think is not good in the portfolio, all right? So that's all it is. So I'm gonna expand this. So we go down, and let me see, what time is it? We're 23 minutes in. So what I'm gonna do here, the rest of for the rest of the hour here, okay, for another 35 minutes, is I'm just gonna review how these portfolios look. So, because these are things that you guys may not be aware of, because you hear a lot of people talk about trading and investing online, and you never tell if they really actually do it or not. I'm gonna show you what it looks like when somebody actually does do it for a living and looks at a portfolio, okay? So this portfolio here started in May 23rd. So it's safe to say that this guy here probably copied the US coronavirus stimulus portfolio, that case study that I did over there, all right? Well, how do we know? Well, he named it $1,000 coronavirus payout from the Japanese government. So this is the Japanese version of the same portfolio. The one I did is an American case study, and then this one is the Japanese version. So let's see how much the Japanese version did, okay? So he started with 1,000, so we're gonna come down somewhere around here to 1,000, and then come up to here, right? And that is 79%. So right now, the Japanese coronavirus portfolio or case study is actually beating the American portfolio. So let's see why. Let's see why both these portfolios are tracking the same index, and why is one doing 79% while the other one's doing 62%. So if we look down here, right, I can already see what's wrong with it. Can you guys see what's wrong with this? Why is it different? Can you guys look at this and see what makes this portfolio do 79%? The Japanese coronavirus portfolio is doing 79%, and the American coronavirus stimulus portfolio is doing only 62%. Okay, who can see that? Just put in the comments, right? It should just be one word. It should be one word answer. Okay, I'm gonna give you guys 15 seconds here to type in the answer. If not, then I'm gonna put it. I'm gonna see pop quiz, guys. I want to see how well you guys, your eyes, or how well you guys been paying attention. Why are two portfolios copying the same thing, and one is doing 79%, and the other one's doing 62%? Okay.
He did too much on Cardano.
Okay. All right. You're correct. Right. Good answer there. Long, from the UK there. That's excellent. Long is one of our students, and so he recognized it immediately. Okay. If you guys look at the altcoin market index, what's missing in here is Bitcoin, right? And so Ethereum is the biggest position at 42%, and Cardano is down here at number 11 at 1.6%. And the reason why it's doing better is because if we go back to the Japanese right portfolio, he has Cardano at 22% and Ethereum's only at 14%. So the percentage difference, right? Now, you guys ready for this? I want you guys to be ready for this, okay? On Wall Street, when I worked on Wall Street, okay, they like to use words that confuse people so that you don't know what the hell's going on. So when you go in there, you don't know how to invest your own money and trade your own money. The reason why they do that is they do that on purpose so that you don't know how to manage your own portfolio, so that you can give the money to Wall Street and they will manage it for you. And then they take a 20% of the profits and they charge you fees and all kinds of stuff. That's what they want you to do. So when you go to Wall Street, they're never going to use words that you and I would use on the streets, okay? Now, I'm stupid as shit, okay? I grew up in the ghettos in America. I came from Vietnam as a refugee, never finished high school. So I am not capable of understanding those big fancy words they use on Wall Street, okay? But on Wall Street, right, this is called your position size, okay? Now, everyone knows what position is. Everyone knows what the word size means. But when you put those two words together, notice that it confuses the hell out of you. Like, what the fuck is position size? What the hell's that? Right? So they say that on purpose so you don't understand. On the streets, we would not call that position size. We would call that your bet size. How much are you betting that this coin is going to go up? See, that's just regular people talk. That's how we talk on the streets, right? Is, hey, man, how much are you betting on that soccer team versus that soccer team? How much are you putting on this, soccer team A versus soccer team B? How much are you betting on red, or how much are you betting on black, right? Nobody goes out on the streets and says, hey, what's your position size on this soccer team? What's your position size on this? Nobody talks like that, but they do that on Wall Street to confuse your ass, okay? This channel is not about confusion, because nothing kills profits faster than confusion. If you go into the markets and you don't understand what the hell you're doing and you're confused, you are not going to make money. That's the reality. So that's why we don't use all those fancy, stupid words on here on our channel, okay? So the reason why this Japanese coronavirus stimulus portfolio is doing better than the American one is because this trader did not size their bets according to the altcoin market index. That's the difference. Can everyone see that? Can everyone see that? If you don't see that, please type no, so that and so that maybe I'll figure out a different way to explain it. Okay. You got 10 seconds to answer. If not, I'm moving forward. Okay. All right. So this is good for this portfolio. Whoever built this portfolio, I'm happy for them. They're making progress and keep it going. All right. Let's go to the next portfolio here. This one here is, man, I don't know. Some of you guys have come up with some easy names for these portfolio, man. Like you guys are making it difficult here. Right? I don't know what the hell is the name of this portfolio? Life-changing profits portfolio. Okay. Okay, I guess that's not too hard because I say that all the time, so I don't know why that was hard for me to read. Okay, so let's see how this portfolio is doing. Okay, this is a pretty old portfolio, so let's change it to weekly and see how it's doing. All right, so in this portfolio here, it seems to be doing well. It's going up, right? So what I like to do is this. I like to, first of all, let's see. It started down here at 2640, and let's see how much this portfolio has grown. Now, keep in mind, guys, we don't know if like they started with this much money with $3,200 or not. We don't know. Okay, they might have started with $100,000 and they lost and it's down to 3,200. We don't know. But right now, since in the last few months, it's grown like almost 400%. So that's really good. Now, when I look at this portfolio, right? If I was the owner of this portfolio, I would draw a trend channel like this, right? Like that. Now, when I draw this trend channel, guys, notice that the traditional way that they draw a trend is they go from the bottom down here to the bottom down here, right? And then they'll go to the top like this, to the top of that wick, okay? Now, that's the traditional way, old school. That's how they teach it in all the textbooks. Okay, now I don't go with that. I go with what's called the majority touch. So I go where the majority touches. So right there, something like that. And you might say, hey, Ty, you cut this tail, you cut this body, and you cut this tail, you cut through this, and why did you do all that for? Okay, I might even change this to something like that. Right there, somewhere right there. Now, look, here's the reason why I do that, guys. Because I want to know where the majority of the transactions occur. So down here, that could have been just one coin, 2 coins, 3 coins, 100 coins. And right here, there might be 1,000,000 coins traded right there. You see that? So I want to draw my trend lines where the charts show me that the bulk of it is right there. Now, the same thing happens up here. I can put it right there, right? I can put it down here too. I can put it down here because that's where the majority happened, right? But the reason why that one's no longer good because it broke through the top of the trend, it pulled back to retest it, and then now it's going back up, and it broke that high already. So this trend line is no longer valid. That's why we got to raise it up to this one. And then it broke through that one. So now the only one left that we have a reference for is this one right there. So now it's that. So I'm expecting this to pull back. Remember, when price is at the top of the trend channel, it often, not all the time, not 100%, but oftentimes it will pull back, okay? So it'll pull back here, right? Before it goes back up. Now, is it possible that it pulls back to the middle of the channel, which is the dotted line here, or all the way to the other side? Yeah, it's very possible. It's done it in the past. I don't see why it can't do it again, right? So don't panic. Like if I had this portfolio and it started to fall right here, I wouldn't panic. Okay, I wouldn't panic. All right, let's go to the next one. Oh, hey, I'm just gonna run through these guys. If you have any questions, just put it in the chat. This one is very similar. This one here, that little gap right there, if you guys notice that little gap right there, that means they added money to it. So this is June. So I wouldn't be surprised if this was the, if this was trying to model the altcoin market index also. Let me see what if Bitcoin is in here. Yeah, so this is very similar to the altcoin market index, right? So that's done well, right? Let's go to this next one. I don't want to review the same ones, guys. Okay, now this one here, it went down before it went up. So let me see right here. What day was this? June 1st. Okay. I don't see anything like funny about this one. Okay, so I don't have much commentary on this one. I don't see anything fishy or funny or risky about that. Okay, this one I do. This one I do right here. Okay, this one I do. So I'm gonna take some time and go over this one. This one I do. Let me see if I can get this. And I want you guys to see what I'm seeing here. All right. Okay, so there's two things that we gotta remember, guys. There's two words here that I want you guys to remember: peaks and valleys. Peak in Vietnamese is called didnt, and then valley in Vietnamese is called didnt. Okay, so peaks and valleys. The peak of a mountain, and then the valley, the valley down here, the lowest part of a mountain. Okay, so just this right here. Pretend that this is a mountain, right? This would be the peak. This would be the valley. Okay, so if this was the mountain right here, then this would be the valley, that would be the peak, and that would be the valley. Okay, so what do I see that is I don't like in this portfolio? All right, so I'm gonna put a trend channel on here. Right now, I want you guys to look at this. Okay, you guys know that I have a 1/3 rule. Okay. When we come down here, when it falls down into the bottom of the trend channel, right, I divide this channel into 3 parts. Okay, I like to divide into 3 parts like this. All right, so it's about 1/3 is about right there, about right there, and I'm just going to color code this in yellow, like that, and then I'm going to copy and paste it over here. And then paste it again. What I did on a Windows is I hit a Control C and then Control V to paste, right? Okay, so I split this into a third. So ideally, I want to buy in the bottom third. Okay, so I'm going to label this real quick here. I'm going to label this the I'm going to label this the 1/3. Very simple, so that you guys, nothing fancy here, guys. All right. 1/3. Let me get you to mute your microphones if you guys are not talking, okay? So, one-third, and then I'm gonna hit Control V, and then Control C, and then Control V, right? And then Control V again, right? Right there. Okay, can everyone see that? This yellow box is the 1/3, the 2/3 area, and the 3/3 area. Now, ideally, when the price is crashing and I need to buy, I want to buy in the 1/3 area. And when it's going up, if I need to sell, right now I'm not selling anything. I'm not selling anything right now, okay? But if I need to sell, I would sell in the 3/3 area. I would not sell in the bottom 1/3 area, okay? Just remember that. So right here, it's safe to say that right here equals a buy. Right here equals a hold. And then right here, that's where we look to sell. Okay, when the market gives us an opportunity, not when our portfolio gives us an opportunity, not when the coin gives us an opportunity, when the market, so we look at the cryptocurrency market index and the Typhoon 30 altcoin market index, depending on which market that we're going with, right? So this is, I hope this makes sense to you guys. I'm trying to make it as visual because trading is a kind of abstract sometimes, and sometimes we got to make it so it's visual so that people can understand it. So right there, right? So now when the price is falling, as it's going up, going up, going up, boom, where's that gap right there, guys? Where's that gap right there? Why is there a gap right there? Let me move this out the way. Why is there a gap right there? What's causing that gap? Go ahead and type it in the answer, guys. What's causing that gap? Is it because the market jumped up? Is it because their entire portfolio jumped up? What caused that gap? I mentioned it earlier. That gap comes from people adding money to it. So this account had about $6,000 in it, and all of a sudden it jumps up to here, $7,000. So they probably added like $1,000 or $1,500 to it. That's what that gap means. Whenever we see a gap in any of these portfolios, that means that they added more money, more cash to it. Make sense? Okay. Now, why is that wrong? Well, that's the area we were supposed to be selling, not buying. If we want to buy, we buy after a fall in price. We don't buy after the price runs up. Okay? Make sense? Does that make sense to everyone? Like we don't ever want to buy whenever price is running up. We want to buy when price is falling down. When things are on sale, that's when we buy. We don't buy whenever things are going up. So that's in this portfolio. This is where I would say I don't like about this portfolio. Okay, now it's going up right there. So you guys already know nothing goes up forever. So eventually there's going to be a pullback. So when it pulls back, don't panic. Don't panic. Okay, so okay, so don't panic when it goes up. Is everybody clear on why I say that I don't like the way this looks? You guys see that, right? It's very simple. Okay, so I want to talk about how to avoid this mistake. Simple. You just draw a trend channel and you just divide into 3 and you say, hey, I want to buy, right? So at this point right here, let's just say that the market was right here. The chart looked like that. And I have a desire to buy. Well, I said, you know what? It's in the middle of the channel. So we don't fiddle in the middle. Okay, there's a fiddle in English means playing around. Okay, the fiddle is that it's like a violin and you play with it, right? So there's an old saying in trading that you don't fiddle in the middle. So in the middle of the channel, you don't play around. There's nothing to do. There's no action to take. Okay, so as it goes up like this, right? There's no action to take here either. Because we're still, okay, now, right? Now, if I want to buy, that's the opportunity to buy. But let me ask you guys this. Is it easy to buy right here when the entire market's crashing? Is that an easy thing to do? Is that easy to do? No, it's not. Okay? Because everybody thinks Armageddon here, the asteroids are coming, all the dinosaurs are going to get killed, this whole world is going to get wiped out. No one wants to buy anything during that time. But as a professional trader or as an experienced trader, that's where we got to come in and buy. Because we got to buy when the rest of the world is selling. That's when we get at the cheapest price, we get the best fill, and we get, if we need to buy $100,000, $1 million worth, right? That's the best time to buy it because everyone and their mother is selling, okay? So that's where, if I need to put money in, let's just say that, let's go back here. Let's say I got a bonus at work. I got an extra bonus at work. I got an extra money, and I want to put it in the market, and the market looks like this. My portfolio looks like this. I still would not do anything. I would not do anything. I would not do anything. I would just keep that money on the side. I would not do anything. I would not do anything. Nothing. Okay, now I will think about putting money. I will now go look at during this day and time, what is the broad markets doing? What's the Taifu 30 altcoin market index doing? Or what is the Taifu 30 cryptocurrency market index doing? That way, those two indexes lets us know the pulse, right? It's like checking the pulse. What is the entire market doing? And then if it's at the bottom of the trend channel also, then that's when those signals come together, and that's when it gives me the confidence to buy right here. Just because my portfolio drops like that doesn't mean I buy immediately. I gotta go look at the portfolio, all right? So, yeah, and even down here, it'd be okay for me to buy on those green candles also because it's near the bottom. It's near the valleys, okay? It's not near the peak. Now, when it starts to come up here, right, pretty much on this candle, on these two candles and higher, then there's no more buying left. Okay, there's no more buying left. Especially, I would not buy up here while price is running up because I'm paying the highest price to get into the trade. And you might say, hey, Ty, why does that matter? Why does it matter? It went up all the way up to here. I bought more here and it went up to this. So isn't that a good thing? Well, let's look at it. Okay, let's look at it. It went from here and it moved up it went up as high as 100%. And you might say, hey, Ty, isn't that a good thing? I might have got in late. I might have got in late at the top of the trend channel, but it went up 100%. Okay, that sounds good in theory. It sounds good when you only have a $14,000 portfolio. Now, I want you to imagine if this was a $140,000 portfolio, right? This can easily crash 50%. Well, what happens if I get in with that money and then it crashes 50%? Then I'm going to be hurt. Emotionally, I'm going to be hurt. Why? Because I'm going to be hurt because I'm doing the wrong action at the wrong place. Okay. Now, if I buy down here near the bottom and it crashes, right? And it crashes the 50% afterwards, at least I know emotionally that, hey, I bought near the bottom. So if it falls a little bit more, I'm not going to freak out over it. Okay. I'm not going to be a stupid idiot and buy at the top and then let it crash, because that's where prices roll over or prices crash from, is from the top. Okay. Usually. Okay. So that's my take on this one. Let's jump to another one. Okay. So I guess these two must be the same person here. Let me see. Yeah. These two right here, let's take a look at these. Okay. Now I see some problems here already. You probably guys already see some of it already. Okay. Okay. So how much time do we have left? We got about 15 minutes left. This might be the last one I review. Okay. But I see some problems with this already. Some massive problems here. Okay. And I want you guys to see what I'm seeing here. Okay. You guys know that these gaps here is when the trader adds money to the portfolio, right? So down here is $900. So he added more money, or she added more money. I don't know which one it is, right? And then all of a sudden they added more money right here, right? See that? Yeah, see that? Let me do this. See how they added more money? They added more money, added more money. Okay, now that's okay. Like from here to here, that's okay because they just started their portfolio. So they're adding, sometimes it takes a week, sometimes it takes 2 weeks, sometimes it takes a month or two to start buying new coins for a beginner. So that right there, in my opinion, that's okay, right? So they added money here and it jumps up. And then the minute they added, notice this, they added money and then it goes sideways. Their portfolio goes sideways and it goes up, right? It goes up how much? It goes up about 20%, somewhere around 20%. They're all happy about it. So what do? They add more money, okay? And then they added more money. And then it went down a little bit. See, this is the part that hurts right there. And then it went down some more. That really hurts. Imagine you just added more money to your portfolio and then it falls 17%. That's not a good feeling. But then it goes back up and boom, it comes up, right? Now, what happened here? Now, guess what happens when it comes up? Guess what human behavior? If he added more money after it goes up right here and right here, guess what this trader's going to do? I'm sure he's going to add more money. And sure enough, there he is. He adds more money to it, right? And then it goes up, right? And at this point, right, if he started off with $1,000 and now it's, it's somewhere around close to 10,000, right? That's a mental, psychological barrier. 10,000, 100,000, 1 million. Those are all mental, okay? Maybe this trader goes, oh man, shit, this is a lot of money. I gotta take profits or something. So this trader sells it, a big chunk of his portfolio. That's why it gaps down and it goes sideways. And then I don't know what happened here, right? But then they added more money to it again and then added more money to it again. Maybe he needed to take this money out to pay bills. Maybe he borrowed the money from someone and he needed to pay it back. Or I don't know what the reason is, but there's some emotional reason going on here for him to take the money out of his account, right? So it went from like 9,500 down to here. I don't know. I don't know what emotional reason that this guy has or this girl has, but it dropped down. And then all of a sudden they added the money back in. And when they add the money back in and then it goes up, it's profitable, right? Let's see how much they made, right? It got in and it went up about 30%. So this trader has shown a behavior. Remember guys, technical analysis is a recording of a person's behavior or a group of people's behavior. Since this is one portfolio, then it's the recording of the behavior of that one trader, okay? If it's the altcoin market index, then it's the technical analysis of what the entire market is doing based on the 30 biggest market cap coins. So, right? So we get a feel for what the entire market is doing. In this particular portfolio, we get a feel for the psychology and the emotions and the behaviors of this one particular trader, right? So obviously, 2-3 times in the past, down here, and this is the third time, he makes 20-30%. And what does he do? He go find some more money to add into it. And this is where I say that this is a bad thing. Because look what happened here, right? If we just draw a trend line, okay, a trend channel right there, it's rough to draw this trend channel, okay, because there's so many gaps in there. But let's just say that we do it like this. You know, we do the best that we can, okay, because there's a lot of gaps here. Now, based on the 1/3 rule, is this a good place to add money? Okay, probably not, because they added money here. Well, they added close to here after this, right? I don't know if they added the same day as this or the next day, but it seems like they added it and then it crashed down. That's not a good feeling to have, guys, right? And then it came to all the way down to here. So they added money here, and then their portfolio dropped from here down all the way down to here, which is a 43% drop. Now, guys, we could have prevented this if we just drew some simple trend channels and say, hey, man, you know what? It's near the top. I'm not adding more money. I'm going to add money when it comes down to here. Like right here is where I would add. All right. So if you notice after this crash, you notice that the trader did not add any more money after that. You see that? Because psychologically, he's hurt. Mentally, he's like, oh, shit. What the hell just happened? Right? I thought that every time I add money, it's supposed to go up. The market went down this time. Right? So psychologically, this trader's hurt. That's why you notice right here, the next few weeks, few months, right here, nothing is added. He doesn't add any more money to it. And boom, boom, right there. Okay, now something happened over here that triggered him and said, hey, you know what? Maybe I'll start getting back into it or something. I don't know, right? What year is this? Okay, 2020, all right? So this trader adds more money here, which is not bad. These were not good, but this is not bad because it's been going down. And if, let's say that we draw a trend channel from here, a downtrend channel, right there. Okay. Let me see. Is it this one? Yeah, it looks like it's more this one. Okay. Now, what ideally you can buy at the bottom of this. This is where I would probably buy right here. Okay. I could buy right here, right here. So when it came down to here, I'd buy here. Now, if you bought near this, right here, near this dotted line, it might not be too bad either, right? But this trader definitely bought, this first purchase might be okay, but this second one was not good when they added more money to that because it's already outside the trend channel, okay? So I'm gonna delete this one. And now this trader adds 2 chunks of money in, and then it starts to go up. So what happens in the past when this trader, every time he adds money, it goes up, what does he do? Well, he adds more. See that? And then it goes up a little bit more, and he adds more to it. So you see that? So this is the part that I don't like about what this trader is doing. Let me show you guys here, okay? So this trend line is dead. This trend channel here is dead. We have to draw a new one because the trend has changed so much, right? So we're gonna go from here to here, right? The trend has changed. So we have to adjust our trend channel, okay? So now let's take a look at this, right? This must have been during that coronavirus crash, probably. Yeah. somewhere in here, in March. All right. Now, I want you guys to look at this. Okay. Now, we wouldn't have known all this was happening. Okay. So just to be fair, let's just go back down to here. Let's just go back down to here. Just to be fair, because that's what the trend looked like back then. Okay, just to be fair, we all know what it looks like now, but let's just go back to when it was just starting to come up right there. Right there. Okay, let's look and see if this trader bought at a good place. All right, so you guys see that. Now, I'm not doing anything fancy, guys. I'm not doing anything fancy. I'm just drawing a simple channel here so I can see, right? Now, this purchase was okay from here because it's near the bottom. It comes up. I don't like that second purchase. Or maybe it was the same day, so maybe it's not too bad, okay? But then now it goes up and comes back down. Now, look here, guys. When it starts to go up, the purchase should have been made right here, somewhere on this green candle, right? Now, after it goes up 3 candles like that, it goes up, and to buy right here, that's not a good idea. We don't buy after a run up in price, guys. Okay, don't do that. That's a very amateur. Only amateurs love to do that. They don't buy when prices are falling. They buy after price runs up. So this is what happens, and then it goes up a little bit, and then they buy again. Please do not do that. Buy when it's near the trend channel, especially after you have 2 points here. You know that it's here. Now, what happens if it breaks out like this, right? You say, hey, Ty, what happens if it breaks out? Do I wait for it to come down here? Well, wait for it to at least touch the top of the trend channel, and then at least buy there a little bit, and then I would buy more when it comes down to here, okay? So now when it comes up to here, we have to adjust, okay? Obviously, the angle of the trend has now changed, right? It goes to a stronger trend now, like that. So it went from like a what do you call that? A 30 degrees to about a 40 degrees, right? And then right here, it's like that, okay? Now, as the data comes out, we can now adjust it to include this now. Now that it comes there, now we know, okay, we got to adjust our trend channel now and hit the lows and ask ourselves, okay, if we need to buy, okay, this is where I would buy. Somewhere down here near the bottom of the trend channel, okay? So let's see what happens here, okay? So that's a good buy right there. You guys see that? That's a good buy. Why? Because it's near the bottom of the trend channel. We're not buying at the top, we're buying near the bottom, okay? Now, some people might say, hey, Ty, you don't know where the tops and bottoms are. You're right, I don't. So I'm using the trend channels as a simple tool so that I can be consistent, okay? So I can be consistently buying near the valleys and not near the peaks. We don't have to be 100% accurate. We just got to be close enough, okay? So as this is going up, right, something happened here. It crashed down. Now watch this, guys. See how the price crashed down and this trader bought more right here? These are actually good buys. Despite what you see here, it's actually a good buy because he bought near the bottom. You guys see that? It's near the bottom, so that was a good purchase there. And then it comes over here, and that's actually another good purchase right there in this area because he's buying near the valleys, not near the peaks, okay? And then this is another good purchase. So actually, during this whole coronavirus issue right here, this trader actually made some good purchases here, okay? So now, right, boom. Now notice that it went up. See that? So I'm sure he's very happy because he bought during this whole crash right here at a very good buy levels, and now the market's gone up since then, okay? Oh, right here. This is a bad purchase. You guys see why it's bad? Tell me why this is bad, guys. Put it in the comments. Why is this a bad purchase? He did good down here. He or she did good down here, but what happened here?
He bought near the peak.
Yeah, he bought near the peak. That means we're near the top of the trend channel, don't buy up here. Don't buy it. Now, I know why this trader bought, because he bought during the bottom down here, and now that it's gone up, let's see how much it's gone up. Somewhere around here, right? It's gone up 60%, 50, 60% right here, right? Even if we count from here, even if we count from the last purchase from here, and it goes up to here, 40%, this trader's like, oh shit, I just made like freaking 40%. Shit, I'm gonna find some more money to put in it. But even if you find more money, I would not put it in up here. I would just hold on to it and wait until it comes down, right? But now when it comes up, right, we also notice that, see how he adds more money here? So this is chasing. We do not chase, guys. It's like when you guys meet girls out there, if you chase after a girl, she's not gonna feel attracted to you, right? You gotta change yourself and transform yourself into the type of guy that when the girls see, they're attracted to you, so they come to you. Don't be that idiot, that amateur, that beta male, okay, that you go out there and you try to chase after a girl. This is what we're doing here. Now, the downside to this is as this trader is chasing the price, it's going up. So guess what happens when you do the wrong thing, the wrong action in trading, and you get rewarded for it? What happens? What happens when humans, as a human, we do the wrong action that we know is not right, but we get rewarded for it? Guess what happens? We continue doing it, okay? So let's see, right there. See, it comes down, and he buys some more, right? Especially this right here, especially when it did this. After he bought, and then it went like this. After he bought, how much did it go? It went from here to here, another 24%. This guy feels like he's unstoppable now. Okay, that's why he adds more. That's not a good deal. Okay, what it should have done is this. Okay, we have enough historical data from his portfolio that this is what I would have done. I would have said, hey man, just draw the trend. Okay, right here, right there. Okay, and I ask myself, is this near the bottom of the trend channel or near the top? Well, it's in the middle. And remember what the old trading sayings are, right? You don't fiddle in the middle. We don't do anything in the middle. We do it at the edges, near the edges. We buy down here to reduce our risk, and we sell near up here to get maximum profits, okay? So as this is going up, right? So right there, this is where I would look. If I wanted the money that was put in here, I would have held on to it and saved it and buy it back in when it's over here, okay? So that I don't go through this emotional roller coaster. See how it went up here and it crashed back down? That hurts. Now you guys might say that, no, it's no big deal, but if we go from here, from the top of that, down to the bottom of this, that's a 16% drop. If you have $1 million, that's $160,000. If you have $100,000, that's $16,000. That's a big emotional pain that you get hit with, where we don't have, we can reduce that. We're not going to eliminate it, but we can reduce that emotional pain as we're going through this. Remember, guys, as our portfolios get bigger, when we start getting into a 7, 8, 9-figure portfolio, okay, the emotions are more painful. So from the very beginning, when we're managing a $10,000 portfolio or a $100,000 portfolio, we have to practice the skills that allows us. We have to say, okay, when my portfolio gets to $100,000 or $1 million or $10 million, man, this percentage, this 5%, it may not hurt on a $10,000 portfolio because it may only be, what, $500? But when this 5% drop or this 5% drop in $100,000, that's a $5,000 chunk. And on a $1 million portfolio, that's a $50,000 chunk. On a $10 million portfolio, that's a $500,000 chunk, right? So we got to think about that, okay? On a $100 million portfolio, that's a $5 million drop when it's only 5%. So we got to think in terms of percentages, okay? They're significant. It's the same 5%, but depending on how, if we have a 7, 8, or 9-figure portfolio, it can affect us emotionally differently, okay? So we have to be, that's why you guys hear me constantly saying, practice the skills that when we have a $10,000 portfolio, we want to practice the trading skills that we can use that will help us when we have a $100,000 portfolio. And we practice the same skills that can help us when we're managing $1 million or 10 million or $100 million portfolio. What you see on YouTube and a lot of these guys that don't trade for a living is they just go online, do technical analysis, and just talk about a bunch of shit, you know, and just talk about these moving averages and these Ichimoku clouds and all this stupid nonsense. And the reason why they don't ever talk about the strategies that allow us to actually trade in a volatile market that's moving up and down and in a big portfolio is because they've actually never done it. So stuff that I'm telling you guys right now, if you practice it, you got to practice buying near the valleys. And if we need to sell, we sell near the top, the peak, near. We're not going to sell at the top. We're not going to never buy at the bottom. If that happens, it's just my random luck, okay? But can we get close to the top or close to the bottom? Yes, we can, okay? So right here, as it goes up, this is the area where if I need to add more money to my portfolio, this is the area I would do it, okay? Notice how it's going up. Now, you guys already know that sooner or later, if this portfolio, if it pops up big, we know that this trader is probably going to try to add more money to it, okay? So let's see if it does it, okay? Comes out here, see right there. If we need to add more money, that's the place where we would add it, okay? So, okay, see how this comes out? So we got to take a moment and readjust our trend channel right there. Okay, we got to readjust it, right? Remember what I like to use the majority touch, where it touches the majority of the open, high, lows, or close. So there it is. I'm going to go in here and go about right there. There, it touches the majority of that right there. Doesn't have to be perfect, guys. All right, so now this right here is up to here, okay? Now, this is going up good. This is going up good. And you know what happens when this trader goes up good, right? He's going to try to add more money somewhere around here. So I would not be surprised. I would be willing to bet that at some point right here, when this portfolio gets up to about $80,000 or near it or above it, that this trader is probably going to try to find somebody to add to it. And there's going to be a gap up here somewhere. There's going to be a gap somewhere in here, okay? I'm willing to bet that, okay? Why? Because historically, that's what it's been doing. Now, if you happen to be listening to this and you're that trader that owns this portfolio, right? What I would do is I would wait until, if this was my portfolio, I would wait until it comes back down to here. Now, if this breaks up above the channel, then I would wait for it to pull back down and retest the top of the channel before I would buy back in. Okay, so that's what I see with this portfolio, right? Okay, we're way past an hour, guys. All right, let me just stop right there and take questions, guys, right? Do you guys have any questions about this? Okay, I'm kind of surprised we got, you know, this many viewers. I didn't expect that because this, I mean, we didn't announce this. I just did it in the last minute, right? Okay, what questions do you guys have? Was that helpful for you guys? Do you guys want me to see more of how I do the analysis on this, guys? Let me, was that helpful for you guys to see how I review the portfolios, right? So now I'm just gonna go through, I stopped at number 10 here. So I'm gonna make a mental note that I stopped at the Binzung portfolios here. So next time when I pick up, you know, I'll start off with this portfolio here, okay? This is the same thing, guys. You guys see that right there? I don't like that, guys. Don't let me see that in your portfolios, guys. I don't like that. Oh, man. I was gonna stop, but this is a good example right here, guys. Let's do it again. You guys see what I'm seeing here, guys? Stop buying. Stop chasing price, guys. Stop, please. Stop chasing, okay? Right there. Okay, you guys see that? This is a good purchase. Buying near the bottom here, this is not, okay? This is not good either, right? The first purchase might be okay, but look at the second one, not good, right? Don't chase, guys. Stop buying at the top, buy near the bottom, okay? All right, any questions, guys? Was this helpful for you guys? Was this helpful? If it's helpful, put in the comments.
Yes, it is.
Okay, that's helpful. And then I'll find time to do some more of it.
Okay, thank you, anh
Okay.
Thái.
All right, no questions, guys? All right, let me see. Let me scroll up to make sure. Yeah.
This is nice.
So blackjack says it's interesting as hell. You see the invisible in a bunch of mathematical red and green. But it's no different, guys, right? So this is like a language here on how to trade. The technical analysis is nothing but the representation of human action, of what they do in certain conditions, okay? So if the conditions do this, so I've done this, guys. The reason why I can see, because I've done this thousands of times. I sit here and I'm commenting on these portfolios, but me, myself, I have done this thousands of times. That's why it's very simple for me. I already know what these traders are going to do when I see it, okay? So we'll continue this later, guys. How did they buy all these tokens at once? Johnny Tran is asking, how did they buy all these tokens at once within the portfolio? Okay, they didn't buy all the tokens at once. It might have been just one coin that they added more coins to that same coin. They might have bought Teslas and bought a bunch more of it, or they might have bought a bunch of Cardano or something like that, okay? So Morris says that just there are probably many people who think very long term, okay, and they plan to cash out. Price is still very low on most of the alts, and for them it probably doesn't really matter. Well, I mean, you can say that, Morris, but I don't like to do that. Well, what I like to do is this. Let's say that I use this as my gauge for what the market's doing, right? So if on a weekly, right? Now, how do you draw a trend channel for this? Well, it's not that hard, right? It's the same thing. We just go down here, right there. This is no different than a trend channel that's 40 degrees, and now it's 0 degrees, okay? So if we look at it from this perspective, right? If we look at it from this perspective, the channel is going sideways, right? Now let me ask you this. Do we buy down here or do we buy up here? We buy down here near the peaks. See, if this is a trend channel going like this, we would buy along down here, right? Well, the trend channel happens to be like this. And when it's horizontal, this is called resistance lines, and this is called support lines. It's the same thing. It's the same thing. It's just, it looks different, but it's not. It's the same thing. I still would not be buying up here. I would be buying down here. That's why when the coronavirus hit right here, you know, I bought a shitload of coins here. I didn't just buy a little bit. I bought a shitload down here, and now it's gone up. If I buy up here, I'm chasing price. Remember, guys, do not chase price. I've done it thousands of times in my life as a trader already, and it hardly ever works out in my favor. It always hurts me more than it helps me, okay? So when I look at this, right, you might say, hey, Ty, Morris said that, hey, the market is still low. Yes, I agree. If you compare where we are at, yeah, this is high up here, this is low down here. So we're near the bottom. And let's say that, I'm glad that Morris brought that up. Let's just say that I'm new to the cryptocurrency market today. I'm new to the markets today. I have no choice. If I want to play this game, if I want to make money from this, I have to get in. I don't have a choice, okay? So I can't say that, oh, I'm going to wait for this, or I'm just going to get in, right? But I'm going to get in a little bit of time. Let's say if I come in with $100,000, I might only come in with a third of that. Why? Because I don't want to put all my money in when prices just ran up. So I'll wait for it to come back down. Now, I can say, hey, Ty, what happens if price keeps going up? Well, it's going to pull back. You know, nothing goes up in a straight line forever. It pulls back, right? So when it pulls back, then I'll start buying some more, okay? Now, if I've been in the crypto markets for the last a year, 2 years, 3 years, then this is very stupid to buy right here. okay? Because why didn't I buy when it was down here? Why did I buy when it's over here? Why did I buy when it's down here? Why didn't I buy when it's here? Okay, why am I waiting for 3 big, fat, long, green candles and then I buy right here? Why? Why didn't I buy all this opportunity down here? Why didn't I buy it all the way through here, all the way through here, right? Why am I choosing to buy after, this is in traditional Japanese candlesticks, this is what they call 3 white soldiers. Whenever you have 3 candles that they open, they close, and then the open and the close is right on top of each other, right here. See that? The body of this candle, where this one closed, this is where it opens the next day or the next week, and this is where it opens, this is where it closes the next week. That's called 3 white soldiers, okay? So this would be 3 black crows right here. Because, the candlesticks back in the Japanese days was black and white. They were not, red and green, okay? So that's traditional Japanese candlesticks, okay? I'm not going to buy after I see 3 white soldiers. Why? Because 3 white soldiers, that candlestick pattern, that is a very, very bullish sign. So I'm not going to chase after it because I know that after that's done, after the 3 white soldiers are done, or 4 white soldiers or 5 white soldiers are done, the chance of it coming back down is very hard. Okay, so I don't do that. Okay, not anymore. I used to do it hundreds of times in the past. I just don't like doing it no more because my portfolio is much bigger. And if I do that, the pain, the emotional pain that I have to take when it comes back down is just too much for me to handle. So I'm not going to do that. Okay, so I hope that answers your question, Morris. Good question right there, right? Okay, so I'm not going to read the commentaries. I'm just going to read whatever has a question mark. Okay, because there's too many for me to read through here, right? Let me see. So John Trong asked, should we do a weekly DCA buying? The DCA stands for dollar cost averaging. Okay, so I dollar cost average when I buy in, and when I come into the market, I have to dollar cost average. Okay, when you're managing a 7, 8, or 9 figure portfolio, you have no choice. You have no choice. You have to dollar cost average because there's no exchanges where you can go and buy just $100,000 worth of coins, even Bitcoin. I talked to a trader last week, and he was shocked when I said, you can't just go onto the exchange and buy $100,000 worth of Bitcoins, right? If you can't do that with Bitcoins, how are you going to do that with all the other altcoins that have less liquidity, right? So if I want to buy $100,000 worth of Bitcoins, I'll go in there, I'll buy 1 or 2 Bitcoins at a time, buy 1 or 2 at a time. And then, because if I try to buy $100,000, that's 10 Bitcoins at one time, that's going to push the price up, right? There's algorithms in there where they see that if the price moves too fast, they adjust. So they can adjust faster than you can put it in order manually. So whenever these idiots talk about, oh, the whales are pushing it up, like in Vietnam, right? In the Vietnamese trading community, there's whenever a trader doesn't understand something, they just blame it on the whales. Okay, in Vietnam, they don't call it whales, they call it sharks. Come up, okay? So whenever they don't understand what's going on in the markets, oh, it's the shark's fault, it's the whale's fault. No, it's your stupid ass fault. You don't know how to trade. Learn how to do it correctly and stop blaming the whales or the sharks. So you always hear these people saying, oh, the whales are pushing the price up. They're buying the price up and then they're shaking people out. And I always ask these guys that say that, how do you do that? Because I'm a whale. I'm a shark. Show me how to do that and make money and I'll do it. And I'll split the profits with you. And they never able to show me how. Okay, they're never able to show me how. Okay, so are there guys out there that can do that? Yes, there are. The guys that can do that, you will never know. You will never know that they're doing that because they're that good. Okay, and they have to collude with the exchange to do that. They can't just do that by themselves because if it's the exchange can see that and they're not going to let you do that. So if for someone to do that, you have to conspire with the exchange owner to do that and get away with it. Otherwise, you're gonna get caught. Okay. So whenever the people say that, I just laugh. I'm like, whenever people say, "Oh, the whales or the sharks are pushing up the market," I'm like, I'm a whale. How do you do that? Me, my team. Our team, we're whales. Show us how to do that so we can make some money from it, and we'll split it with you. It's a bunch of bullshit. Okay. If now, let's say I just started out with $1,000 or $10,000 or $50,000. I can buy in at any time. So when the price comes down and it comes up, for example, like if I want to buy $100,000 of any coins, I will have to buy when it starts from here and buy it all the way down to here. And I might even buy it up to here. So for me, right, just so you guys know, when me and my team are buying, we're buying in this area right here. Right there. Why? We don't have a choice because we're taking big positions. We're putting like, $50,000, $100,000, $500,000, $1 million into that one coin, right? So we have to get the target that we hit is a lot bigger. Now, let's say if you only have $10,000. Well, then your target is very easy. It's very easy. Let me show you how big your target is. You can be more precise. You can be like that. You can come in here. You can come in there. You can come in here. You can even come in there. Right there. The reason why is because you just click a mouse and you get your whole order filled. You buy $1,000, you click a mouse, you get $1,000 worth of Bitcoins. You want $1,000 worth of Ethereum, you click the button and you get $1,000 worth of Ethereum. But if you want $100,000 worth of Ethereum, you want to go look on the, for example, go look on the Decred price at any exchange and ask yourself, how would you buy $100,000 worth of Decred? $100,000 worth of Decred. Okay, the symbol for that is DCR, Delta Charlie Romeo. Go look it up and ask yourself, if I had $100,000 and I need to buy $100,000 worth of Decred, how would I buy that? Man, they only sell one Decred at a time. It's going to take you like 6 months just to buy $100,000 worth of Decred, right? So if you want to buy Decred, $100,000 worth of Decred, this is what it looks like. You really don't have much of a choice, right? So if you believe in that project that much, that's the area in which you have to buy it. Matter of fact, let me just change it. It's more like this. It's more like this. I'm trying to rotate this sucker, but it's not letting me rotate. Oh, here it is. It's more like this. Like if I want to buy Decred, $100,000 worth of Decred, that's what it's going to have to look like right there. Right there. Right there. It looks like that. That's the target that I'm aiming for, to get $100,000 worth of Decred. But if you only get $100, then your target is very small. You can be more flexible, okay? And this is the example that I use. If I'm managing a 7, 8, 9-figure portfolio, I have to dollar cost average in and out, right? Because I'm like an aircraft carrier. An aircraft carrier, when it moves, it can't just turn. It has to take several kilometer radius. It has to go for like maybe 5, 10, 15, 20 kilometers before it can turn left or before it turns right. But if you're on a jet ski or a, what do you call it? One of those jet skis or on a small boat, if you want to turn left or right, you just turn the steering wheel and you just turn. Okay? So the bigger the volume is, the more you have to dollar cost average. The smaller your portfolio is, the less that you have to dollar cost average. Okay? So whenever, like I talk to traders, and when I hear them talk, I can tell how big of a trader they are just by simply asking me, how do you get a $200,000 order filled? How do you get $1 million order filled? The way that they answer me lets me know what level they're at. So when I talked to a trader recently, and I mentioned that you can't just go in there and just click a button and buy $100,000 worth of Bitcoins, he was shocked. That lets me know he hasn't done that yet. Okay? So, okay, any last questions here? We got to wrap it up, guys. We're over the time limit here. Let me see here. Oh, man. There's a funny comment here by Uzak about I should be a priest. I don't know what that has to do with trading, but okay. Okay, all right. I don't see any more question marks. Okay, guys, thanks for joining me on this video, guys. I hope you enjoyed it. I hope you like it, right? Johnny Tron, $5,000, John. There's not much dollar cost averaging there. Now, here's what I would do. There's not much dollar cost averaging. I would start dollar cost averaging like with like $20,000, $50,000 portfolio, but not with 5,000. Because if for a $5,000 portfolio, every bet that we make on a coin is probably 50, $100. So there's really not, you're not gonna see it. That's the problem because the portfolio is still small. Okay. Right. All right, guys. Thanks for joining me on this broadcast, guys. I hope that you guys find this useful, guys. Remember, our channel, we talk about trading in the real world. We don't talk about fantasy bullshit trading. You know, we talk about the stuff that we actually do to manage a 7, 8, 9-figure portfolio. If you guys want to learn more about how we do this, I highly recommend that you guys go and get a copy of our cryptocurrency investing blueprint. Just go over here to shop, right here, right? Get your copy right here. And then we talk about it in depth, okay? And then if you're just starting out, you don't know what the hell cryptocurrencies is all about, then get our What is Bitcoin, Blockchain, Cryptocurrency Investing. It's a good introduction to what this whole thing is all about and why we keep talking about it, all right? So we got plenty of products and courses here to help you whatever level you're at. Thanks for joining me on this broadcast, guys. And I will look forward to seeing you guys in a future broadcast. And I'm going to end this broadcast right now. And don't forget to follow me on Twitter at HeyTaiZen, okay? And just stop texting me and messaging me and asking me if you should sell right now. One, I'm not a licensed financial advisor. And number two, I ain't selling shit. I told you guys already, right? Matter of fact, let me just say it again. Some of you guys keep bugging me about this nonsense and keep texting me, when do I sell, when do I sell, when do I sell, and shit. Okay, I told you guys already, right? If I was to split this into threes, I'm gonna right click on this where the drawing tools are. I'm gonna hit remove all drawing tools, so get rid of all of it at one time, okay? Guys, I said this to you guys before already. I'm gonna say it again. So here's the bottom, right? You guys all see that. Here's the bottom, right? Here's the top, okay? If we divide it into threes, it's going to be somewhere around there. You guys see that? 1/3, 2/3, 3/3. Okay. Now down here is where I'll be buying, and it comes all the way up to here. This area I'll be holding, and I will start looking at the charts to consider selling when it gets up in this area. Okay. That's what I'm thinking. Now down here, if I'm new to the markets, again, guys, I can't say this enough. If I'm new, I have to get into the markets. I can't wait for, I got to start getting into it, right? So I will start buying a little bit here. I'm not going to buy everything, but I'm going to start buying a little bit here. But if I've been in the markets for the last year or two, then we should already know this. We should already know that this whole area down here was a buy area, and that's when we were buying. So now there's no buying. I'm not buying anything. Now, some of you guys might say, hey, Ty, you guys didn't have the cryptocurrency market index out before, okay? So that's a good enough excuse. Let's go to the coin market cap here and use their market cap, right? The reason why we built this Taifu index is better is because of several things. It's better than the coin market cap that they have is because, one, we remove all the stable coins, right? The stable coins don't make money, so why should we look at it and why should we count it? They don't go up in value. Number two, we don't mess with coins. If you guys look at coin market cap, there's like, what, 6,000 coins, right? There's over 6,000 coins, but most of those don't have hardware wallet support. So we're not messing with any coins that don't have hardware wallet support, and we don't mess with any coins that don't have a major exchange listing, okay? So we removed all that. So the only coins that's in the indexes are coins that have a hardware wallet support. If it doesn't have a hardware wallet support, we don't even consider it, okay? So it's too risky, it's too dangerous. Besides, when we're managing a 7, 8, and 9-figure portfolio, right? Think about that. Do you really want to put $1 million or $10 million into a coin that has no hardware wallet support? Do you really want to do that? Okay. The answer is no, 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 no. Okay. We've already lost millions of dollars already not using a hardware wallet support. We're not making that mistake again. All right. So over here, guys, let's go to this total market cap, right? So let's look at right here. Just this range from the 2007. Okay, so if you guys look at this, right? Some of you guys are saying, "Hey, Ty, you guys didn't have the Taifu altcoin market index or the Taifu 30 cryptocurrency market index. So how do we know?" Well, it's simple. You take a look at this, right? And the peak around here was like around 835, I think it was, somewhere around this peak right here. 821, I think it's around 830 or somewhere around there, okay? So 800, and the low is what? The low is down here. The low is around 100, 103, 104. Let's just run it from 100, let's just say it's 800, just so the math is easy, okay? So what happened there? Oh, I screwed that up. Okay, I accidentally, okay, so it's from 100 for the low down here to the high, which is about 800 and something. So that's why I'm not looking at nothing until it gets past the 600 billion market cap, because that's about the 1/3. Okay, so from 400 to 600 is like the middle where we hold, we don't do anything, and then from the 200 to the 400 or anything below 200, that's where we're buying. So when I said that we were buying, we're buying around this area right here, all this area we were buying, and then when it went up, we didn't buy. Then when it fell down to here, we bought down here, and then we bought some more. We bought a ton more down here. We didn't want to, but the market gave us an opportunity, so we bought more down here. Okay, and when you guys here say, hey, we're not going to buy anything, we're not going to even look at the charts until it's above 600 billion market cap, that's what we're looking at, that number right here. But now that we got the Typhoon Portfolio Manager built and we have the correct indexes in there, we use this instead. Okay, but in the past we were using this, right? So if you guys wonder where did I get that number 600 billion from, that's where I got it from right here. Okay, so that's it, guys. All right, that's it. We are done today, and I will look forward to seeing you guys in a future video. All right, let me see, where's the end broadcast button here? All right, thanks for joining me there, Kevin and Long, and I'll catch you guys in the future. And this will conclude the broadcast, guys.